Good evening and welcome to tonight's webinar, member-only content for ASX investment opportunities in review for the 12th of April. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which includes access to our model portfolios. If you'd like to know more about the service, please contact me on 1300 614 002. For people joining us tonight on the trial, part of your 30-day trial, at the end of the trial you have access to the member area for $1,320 for the 12 months. And just as a reminder, during your trial, please give me a call in the office so I can better show you how to use the technology, get the most out of it, set up the model portfolios, and also discuss some of the opportunities that we're focusing on in the market. So part of your trial, take advantage of that, and please reach out and give me a call on the office number. The graph up on screen there is the Nasdaq. We continue to watch the technology area, so there's a rotation back into growth names. We're seeing some of the high quality tech companies perform very well at the moment. That's driving the Nasdaq index higher. We remain long equities and willing to take on risk until such time as we see that Nasdaq trade below that 10-day moving average, and we'll take a closer look at that in a moment. The table on screen, we haven't looked at this, but just as a reminder, we're now on the cusp of the first quarter 2021 earnings coming through for the S&P 500, and what we're expecting is roughly around, or what analysts are expecting, is actually slightly lower earnings growth than what they were forecasting as part of the 2021 recovery, say 3 or 6 months back. What we're now looking for is earnings at around the same rate as the fourth quarter of 2020, which is about $39 of earnings per share. And that is lower than where analysts were sitting at. Previously, analysts thought 2021 earnings would accelerate up to $175. So again, that's the average earnings of all S&P 500 companies. So where the market sits is somewhere between this 173, 175 level and 168. Obviously, $40 a quarter gets you to 160, which is where we were in 2018 and 2019. So the market's roughly 30% higher than where it was in 2018 and 2019, but obviously interest rates are still lower, and they're approximately about half. We're sitting at about 1.7% on the 10-year. During 2018 and 2019, that was sitting closer to 3%. So that's the justification, along with a pickup in earnings in 2022. So it becomes an important point for the market to see whether the earnings meet a relatively low threshold there at around $40 of earnings per share. So as we move through this month, we'll start to get a bit of a test of where those earnings sit relative to market expectations. Up on screen is the graph of the Nasdaq. So just to zoom in a little bit and have a closer look at this, the technical trend remains extremely strong in the Nasdaq, largely supported by the rally in the likes of Amazon, the chip stocks, Microsoft, Facebook, Apple. The large cap tech stocks have led the market higher. What we want to watch for here is, in the course of the next week or so, do we get a rollover and some trading below the 10-day average? I'll draw your attention to that on the blog if we start to see that develop. Moving through the top 100 stocks this evening, and then I'll conclude with a look at a couple of our high conviction ideas and ETFs that we're focusing on at the moment. So we get the percentage gainers to the top. Organise it in buy signals first. TPG, we continue to like this, but the earnings obviously remain fairly mute as far as earnings growth, remain fairly flat at the moment. Cochlear under algorithm buy signals, and I'll just compress that in a little bit more. So it's switched from sell signals up the top here into buy signals. It is in the model portfolio, so if you were to click on that tab, look at the ASX 100 model portfolio, you'll see Cochlear in there. The stocks perform quite well. The most recent support level was around that $200 level, now pushing 221. Xero is one of our high quality tech stocks that we like. The buy signal there gave us the pre-warning to track this stock, and the entry level that I highlighted on the blog was a cross back above the moving average there at around 120, now pushing 140. You could stick with the trade until it breaks below that moving average, but starting to get up to fairly expensive levels. But we continue to like the long-term story there for Xero. ResMed support there at around that $22, now pushing 26. Again, you could stick with this as long as it stays above that moving average. It sits in the model portfolio and has done for quite some time since it switched from sell signals here into buy signals in 2018, and has continued to run that pattern of higher highs, higher lows. Terrific revenue growth, good underlying double-digit earnings growth there in ResMed. Atlas supported around 550, now pushing 610. Sydney Airports, again, hard to get visibility. You wouldn't expect this to rally too much maybe until we get into the back half of this year and there's some certainty around international travel recommencing in October. NextDC, mixed views on this. A number of the large investment banks rate this as one of their best growth opportunities in Australian technology. We continue to struggle with the reporting of the earnings and the cash requirements of the business, but for the moment they're supported around $10. The stock's trading $11.50. It's above the 10-day average. CSL, we like this. I think this is a buy for long-term investors. Under algorithm buy conditions, got the positive pivot point arrow there, supported around that 240 level, and we'd expect that to trade higher over the next 12 to 24 months. Appen Group could be getting down to oversold levels. I'll take a closer look at the updated financials here and put a post on the blog this week. The stock's corrected from $45 down to $16, and we'll just continue to monitor that. It's really just on the radar and one that's been added to the watch list, as is Altium. So we're starting to take a closer look at this. It's under algorithm buy conditions. It's above the 10-day moving average. It's a slightly higher quality tech play, I think, Altium over Appen. Support here at around this $25 to $27 level, and I think again that's one that you want to be starting to add to your watch list and taking more note of commentary around that. BlueScope Steel's performed very well since the switch from sell signals into buy conditions here at $15, now pushing $20. Wesfarmers continue to like this. Good fundamental story with exposure to retail spending across Catch, Bunnings, Officeworks, supported around that $50 level. I'd be surprised to see this really rally up and make new highs. It is a little expensive where it is at the moment, and is probably due for more of a consolidation sideways pattern. Maybe back up at around this 54, 55. You could think about selling covered calls over it to drive extra income. Amcor, now analysts put a research note out during the week talking about the slightly slower demand in plastics volumes over the last quarter, and that really took Amcor off its highs there from that sort of 1570 level with a pullback. At around $15, whether it touches there or even at $15.30, I'd still be a buyer of this on the dip. Upside's not much more than about $16.50 in a strong market, but it is one to think about selling covered calls as an income contributor. Portfolio's downside risk is fairly low there in Amcor. Suncorp seems to be finding support following the increased commentary around the potential spin-off and sale of the banking division. So at the moment, I just highlighted that it has switched from sell conditions into buy conditions. Support at $10, now pushing $10.30. A2 Milk, I've been flagging this on the blog, and it really is not without its risks. It's a high risk opportunity in the market. There's a bit of a vacuum around what the earnings trends look like at the moment. We've seen 3 earnings downgrades over the last 6 months or so, and we will soon see a further update from the company. The way to think about this is if you're wanting to trade the stock, you really need to be a little disciplined with stop losses and have a think about either running a stop below the most recent low there, which is more down around that 750, 760 level, or even just simply saying as if it closes below the average, I'm out. If it moves back above the average, I'm in it. And what we're trying to do is just to see if there's an inflection point here where there's sufficient bad news priced into the stock where maybe there's a turnaround story or the potential of even a takeover of A2 Milk. Woodside Petroleum, more comfortable with this. The risks here are relatively low, supported around $24. We see that trading higher. Seek, we think, is getting expensive up here at $31, $32, so be patient, wait for that to pull back. Our preference in the technology plays been Zero and car sales. ALS under algorithm buy signals, but not one we're providing a lot of commentary on at the moment. Cleanaway, the next key date here is the 6th of May. The company will update the market around the takeover bid for Suez Waste Management here in Australia. I think it's an expiry date where the European company has to either finalise its terms on the takeover, and there's two transactions essentially. So I think no matter what it looks like, some part of Suez Waste Management assets in Australia will be acquired by Cleanaway, but it's a difference between whether it's a breakup of sort of $500 million worth of assets or whether it's $2.5 billion worth of assets. So that key date will be important for Cleanaway shareholders on the 6th of May. I'd be inclined to be a buyer of any weakness in Cleanaway between now and the 6th of May, though, because I think either of those outcomes should be viewed positively for Cleanaway. Mirvac Group, not doing there at the moment, still preference SLF ETF. Transurban, I think this is a fairly low risk infrastructure play to consider. Support there at around that $13 level. JB Hi-Fi under algorithm buy signals. It's rallied from the recent signal there low at 42, now pushing 52, but maybe starts to taper off a little as government support starts to reduce. Domino Pizzas under algorithm buy signal, so it switched from sells to buy there at around $70. We had another signal here at around 82, now pushing 106. Continue to buy that on any future algorithm buy signals. Afterpay rallied from 100 up to 120 following the recent signal. The index, will cover that more in the context of the Nasdaq rather than specifically the XJO. Beach, preference Woodside over Beach. Aurora, we like this but buy it on the dip. The company is buying back shares. Earnings seem to be turning around. Any pullback to around 270 would be a buy opportunity, and I'll highlight that on the blog. GPT, not doing there at the moment, not doing in Stocklands. Woolworths is a buy off that 37 support, now pushing up to 41. The Endeavour Drink spin-off remains attractive. CBA is the only bank of the major four that's now in the model portfolio. Rio rallied off that 105 support, now pushing 114. Continue to like Rio. BHP and Oz Minerals would take a look at that on the next buy signal, but not there at the moment. Coles Group, not much in the way of upside, but buy this sell covered calls. Fairly safe income contributor to portfolio. Downer EDI delivering double-digit earnings growth over the next 12-24 months should find support at around $5 and continue to grind higher. Not doing in alumina, although it is under buy signals. Soul Patterson's rallied from 27 up to, sorry, just to finish that point off, it's rallied from around 27 under the buy signal here up to $32, so continuing to perform strong. Cube, full value but well supported by terrific growth in overall port volume, continuing to see double-digit port volume growth on the same time last year, should be supportive for the long-term earnings outlook there for Cube. Lendlease, high risk, supported around 13. We'll continue to monitor that, but it is in the model. IDP's under buy signals, as is WiseTech. REA Group switched from sell conditions into buy conditions. We had the initial entry there at around 108, rallied up to 160, pulled back. We got the buy signal there again at 130, now pushing 150. Aristocrat Leisure shifted from sell signals into buy. The most recent signal in Aristocrat was at 28, now pushing 36. That's obviously in the model portfolios. Fortescue's under buy conditions since the low there at $15. Well, the original signal was a switch from sell to buy back in October 2019 or July 2019. The stock's up considerably, and we've had a subsequent signal there in September last year. We're not under buy signals where we are at the moment. Will be the shorter term trading signal, which is this green arrow, is highlighting that we're now starting to see what's likely to be a pivot point. It's worth just pointing out that that's roughly 50% retracement of that prior move. It lines up with this high almost, so not surprising that we're starting to see some buying interest turn up there in Fortescue at sub $20. Star Entertainment, not there, still continue to struggle a little bit with Star and Crown. Computer share, take a look at this on a pullback. The last algorithm buy signal there was around $13, now pushing $14.50. Link Administration, don't mind the fundamentals here and happy to be a buyer of that on the dip. It is under algorithm buy signals. Qantas not doing too much there at the moment. Evolution not doing there. Charter Hall under buy signals. Goodman Group, high quality property trust. We were a buyer of this on the pullback. Some traders have closed that out. Back up at around 18.50s, pretty close to full value given the low yield that it's compressed down to. Northern Star remains one of our preferred ways of playing exposure to gold. Fisher and Paykel rallied strongly off that 25 support level back to $30. I think that's fair value given the high PE at the moment. Bank of Queensland. So now we've switched out of stocks that are under buy conditions into stocks that are under sell conditions. The banks have obviously had a good rally, but are due for some level of pullback. Reece not doing there at the moment. Telstra, we like Telstra even though it's under sell conditions. Ansell, we think at around $39-40 is up against resistance. Medibank, don't see much in the way of earnings driver there to the upside. Car sales, after this being one of our preferred technology plays within the top 100 stocks, it's now switched to sell signals. So we look to take profit on this and monitor it. We do think it is a good business with good strong fundamentals, international distribution or international reach, but we'd look to take another consideration of that on a future algorithm buy signal. Magellan Financial not doing there at the moment, and highlight that that's now under sell signals. Santos, preference Woodside over Santos. Bendigo, again, all the banks, we're sort of more thinking that we'll take a closer look at those if we see the Nasdaq break lower and the Aussie banks trade below the moving average, and that'll become a focal point for future weeks recording and obviously drawing your attention to it on the blog. Likewise with NAB. We'll have a look at that if we see the Nasdaq trade below the average. Now the ASX, we like this from a fundamental standpoint. We note that it has switched to algorithm sell signals and it is under a negative pivot point. So it's something that we start watching a lot closer. And the two this week of interest have been, or at the end of last week, have been really Newcrest and ASX, that are stocks that we like that have switched to sell signals, so that we continue to monitor that a lot closer. Ramsay Healthcare under sell signals, but don't see the downside risk substantial there. Westpac, as I said, we'll look at the banks if we see the Nasdaq below the average. Brambles, we continue to like that as a slow recovery, even though it is under sell signals. Treasury not doing there at the moment. AMP not doing there. Reliance. Sonic we've taken profit on, so there's a high quality business, good earnings growth, high single digit earnings growth, but at around $37 we think that's relatively full value, and we note that it's switched to sell signals. Spark not doing there at the moment. Coca-Cola up against the takeover price. Mineral resource. Actually, before I move on, let's just backtrack and have a closer look at this mineral resources. A little like Oz Minerals, high quality business here. When we do see some weakness, we're likely to see this switch back to algorithm buy signals over the coming months. So I'll draw your attention to that when we see that occur. Boral up against resistance at around $6, but the next trade in Boral will be a buy on the dip opportunity, and throughout the course of this year, we'll have a look at that sell-off in Boral and the subsequent algorithm buy signal that will follow. And again, I'll make sure I draw your attention to that. Origin Energy under sell signals at the moment, but reasonable recovery opportunity there for Origin, as is the case with Ampol at around 25 it should be support and could trade back up towards that $30 level, but it just highlighting that Ampol's undersell signals, as is Incitec undersell. Dexus is. Tabcorp up against sell, likely to shift to buy signals later this year. AGL had a little bit of buying interest following the news of them splitting the company in two, but hasn't done too much in the last sort of 5 or 6 days. IGO not doing there at the moment. APA Group. So again, this is a infrastructure asset that we like. 5% dividend yield. Looking for it to return back to mid-single digit earnings growth, but note that it has now switched to sell signals. So where we've been able to, we've started trimming our exposure to APA, and not that we really dislike the fundamental story here, but we're starting to trim the exposure to APA and looking to reallocate that capital into other buy signals that are starting to develop. Horizon, lower lows, lower highs, and just flagging that the counter trend rally and these sell signals have been picking those lower high patterns there in Horizon. QBE under sell signals at the moment, so if we're looking for something in insurance, it's more Suncorp and maybe IAG as a turnaround story for later this year. AusNet under sell signals. Macquarie back to neutral levels of earnings, so likely to see Macquarie deliver the same earnings this year as what they did pre-pandemic, so stocks back at that same price, and we'll continue to sort of monitor any trading updates there. Crown Resorts, I think there at the moment. South 32, not preference Rio over South 32. BHP pull back to maybe sub $45. We'll see that switch to buy signals, and we'll take a closer look at that. Centre Group, not doing there, prefer SLF over too many of the individual REITs. Orica, not there at present. Worley's under sell signals. Insurance Australia, clearly in a downtrend, under pressure at the moment, but could be a recovery story for later this year. Maybe a break above $5, you'd want to start taking a closer look at IAG. Nine Entertainment, we think that is a sell opportunity, and we'll look at that when it switches from sell back into buy conditions. We'd expect that and just jumping back. So Nine Entertainment, throughout the course of this year, we're likely to see this correct lower and a switch back to buy signals, and we'll take a closer look at that. Oil Search undersells signals. Vicinity undersells. Oz Minerals, high quality business here, good growth prospects, and like that Mineral Resources over the coming 6 months, if we see a more material pullback in Oz, we'll see it shift back to buy signals, and we'll take a closer look at it. Newcrest Mining, the preference at the moment remains Northern Star over Newcrest. Again, an early switch to sell signals, and we're monitoring the assessment there around gold in general, and whether it runs in a resistance at around this 730, 740 level, or whether we're likely to sort of see the fundamental story there can support gold trading higher. So we continue to review that. James Hardie Industries up against resistance where it is at the moment, and back to TPG. So a couple of the opportunities, what I might do just to finish on tonight is we'll just go in here and select recent blog posts. So this includes stocks that have been posted on the blog in the last 30 days, and IZZ we like, which is the China ETF. Zero, we've really taken profit on this at the moment, as I mentioned earlier. Amcor, be inclined to buy that anywhere around $15. A2 Milk, high risk, but watch it when it trades above the average. Woodside Petroleum, supported around 24, not likely to accelerate too quickly to the upside, but downside risk should be relatively low. Cleanaway, think about buying this on any dip between now and May the 6th. Transurban, we like that as just an infrastructure play coming into the June dividend. Beach, preference is really Woodside over Beach. Rio Tinto, we're comfortable with that. Depending on whether you're from a trading standpoint, hopefully you're already set in it. Maybe stick with it until it breaks below that moving average. Coles we like, but not much in the. We're mindful that the earnings growth rate is decelerating. So not expecting too much in the way of upside. So if you own Coles, think about selling Coles. Cube, we like that, and encouraged by the higher port volumes that we're seeing. Gold Roads. So at the moment, Northern Star and Gold Roads sort of move to the top of our list for gold exposure. Goodman, high quality company, but for traders, you've probably already made the profit on this. But around 18.50, it runs into resistance based on valuation. Northern Star we like because of the cost savings with Saracen. Fisher Paykel, hopefully you've made your profit on this at around $30. That's back to about fair value. Car sales, again, hopefully you've made the profit on there. You can either stick with it until it trades below the average or anywhere up around $20. I think it starts to run into resistance. Sonic, hopefully you've made money there, and again, thinking about taking profit. And they're back to zero. So the ETF that I've been commenting on the blog is the Cure, give you exposure to US biotech stocks. I think the range here, you need to create a fairly wide band, say from $60 through to $65. But think about accumulating this stock with a view that it's unlikely to breach that $60 support, and I think the fundamentals support this finding buying interest and ultimately trading back up to maybe close to or retesting those $80-$85 highs. So we continue to accumulate Cure on that basis. And the other ETF that I'd been commenting on in prior weeks had been the CNU. It's rallied from $8 back up to around $8.70, so again, not quite 10% gain, but you can think about taking profit there or stick with it as long as it trades above the moving average. And just to finalise tonight, just a reminder that what you want to be doing in portfolio, staying long the market, but just be mindful that we do have a backdrop of high PE valuations, and one of the triggers for shifting to short exposure in the market will be if we see this Nasdaq roll over, and I'll draw your attention to that on the blog. Thank you for